Welcome to Wall Street Niger, FVG. I go by the name Omashola Bemigo Ofuya, the macro translator, as you already know. And this is just a recap of the macroeconomic indicators that came out yesterday and also the day before in the Forex market. Yesterday, the Bank of England decided to keep interest rates unchanged. Also, the MPC Monetary Policy Committee voted a 6-3. So that means 6 members of the Monetary Policy Committee felt it was wise and appropriate at the time to keep interest rates unchanged, and then 3 members voted for a rate hike. During the press conference, Governor Bailey said investors and traders shouldn't leave the meeting expecting a rate hike from the Bank of England. So the Bank of England is not necessarily going towards a direction of hiking rates from now. They're looking at the situation of inflation, headline inflation, and also core inflation. They want to see how core inflation can cool further, and also the situation that could aggravate headline inflation. So that's the situation with the Bank of England. And also, I think Governor Bailey hinted that gap in the labor market puts workers in a position where they're not likely to demand more wages. So we'll see how that holds up in the next reports for the average earnings that will be released next month as well. You can say that that may be bullish for the pound sterling, but it's still a mixed situation because now the Bank of England is playing a card to see how core inflation can cool faster. And if core inflation is cooling faster and headline inflation isn't rising as high, then we may have the case for an easing cycle from the Bank of England. But we'll have to wait and see. For the USD, the advanced GDP quarter on quarter came in at 1.5%. Market was expecting 2.1%. That shows a slowdown in the economic growth going into the second half of the year. And then the advanced GDP quarter on quarter prices, which came in at a whooping 6.1%, even though market forecast was 4.1%, shows that prices are still sticky. Expectations remain elevated. Core inflation, on the other hand, 0.1%, even though market forecast was 0.2%. So we could say that core inflation still is at a place where it's cooling, but not as fast. So maybe or possibly the situation at the Middle East, the tensions at the Middle East dies down or a deal happens, we may see core inflation going down. And this could mean that the Federal Reserve is not looking to hike interest rates, but looking to cut rates. The Federal Reserve decided to keep interest rates at 3.75%. What that means is they're waiting to see how core inflation and headline inflation holds. The Federal Reserve wants inflation at the 2% target. If the Federal Reserve go down the path of a rate hike, we may see a bullish demand for the USD. I think we have a bearish USD, especially against commodities. And I think we also have a bullish pound, but it depends in terms of higher yield. So yeah, those are the observations. I hope that you check out the data and hope that you trade wisely. Do have a wonderful day and keep it locked.